Investment opportunities in cryptocurrencies are appealing for several reasons. Some people use cryptocurrencies as a fast method to make money, while others use them because they have faith in blockchain technology or a particular project. Due to FOMO, fear of missing out, for some, investing in cryptocurrencies may be as simple as hopping on the bandwagon. That notwithstanding, cryptocurrencies like Bitcoin are frequently referred to as great stores of value and hedges against inflation. So where do cryptocurrencies and inflation overlap when inflation rises further? Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed, to make educated and timely decisions, and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here we are building a community to help each other stay informed and make the most of our financial gains. When the cost of commodities and services rises over time due to the declining value of a currency such as the US dollar, the economy is said to be experiencing inflation. But they say that, unlike fiat money, cryptocurrencies couldn't be as easily influenced by shifting interest rates. Earlier this year, on hearing that the Fed will be raising interest rates, both Bitcoin and Ethereum surged, gaining roughly 3.5% and 1.2% respectively. One factor contributing to significant losses in the cryptocurrency markets is rising inflation. The United States Federal Reserve approved a 0.5% increase in interest rates, the largest increase in the previous 20 years. After hearing about the interest rate increase, cryptocurrencies experienced short-lived increases in prices. But many experts continue to think that cryptocurrency has been acting like a large tech stock, similar to how equities have been acting lately. The purchasing power of the US dollar compared to Bitcoin decreased further in the post-pandemic period, taking a big dive in March 2020, and then another decline before the end of 2020. Additionally, the government's ongoing money production has caused the value of the US dollar to decline even further. The US dollar has already lost 85% of its value over the past 50 years due to inflation, which has bolstered Bitcoin's reputation as a superior form of fiat money. However, the price of Bitcoin started to decline in November 2021 after reaching an all-time peak of $69,000. The buying power of the US dollar relative to Bitcoin began to increase around the same period, increasing again in March 2022 and the end of November 2021. Notably, the purchasing power of the US dollar relative to Bitcoin has been increasing for most of this year. The inflation hedging argument behind Bitcoin was endangered by the same. Additionally, investors, particularly beginners, find it difficult to invest due to ongoing concerns about market uncertainty and the high cost of single Bitcoin unit. Prices of Bitcoin haven't often fallen during periods of volatility, which is largely in line with the idea that Bitcoin is independent of governmental control. Sociopolitical problems have nevertheless been a significant contributor to Bitcoin's price trend over the previous 2 quarters, despite generally unfavorable market conditions. Additionally, as the market develops, the increased connection between Bitcoin and the 2 significant indices, the S&P 500 and NASDAQ, may work against the coin's claim to be an inflation hedge. The narrative around Bitcoin as a value-storing asset was further hurt by the top coin's price, which had fallen 57.02% from its all-time high of $69,000. The issue of whether Bitcoin will outperform conventional assets and fiat money at this time, with the overall market progressing as more unfavorable, still has to be answered. According to many commentators, the developing Bitcoin and cryptocurrency markets have given way to declining ROIs over time. According to Brandon Neal, Chief Operating Officer of the DeFi lending protocol Euler and former broker of the Federal Reserve Bank of New York, crypto is still a young asset class. Thus, it is impossible to predict how inflation will influence it. It may not have necessarily been true that crypto was a good inflation hedge. It may have just been coincidental and that up until now, crypto merely looked like it was a good inflation hedge, said Neal. He asserted that if we use gold as an indication, certain historical data points make it possible to conclude that gold is a superb inflation hedge. But you would have to disregard all the instances when it wasn't. Neal contends that it is more plausible that since its 2009 debut, Bitcoin has established the appearance of a hedge. But considering that the data only spans 13 years and was collected during a time of record low interest rates, it's hard to predict whether this would still be the case in the future. especially in light of how the markets and overall situation have altered. Because it is decentralized and unrelated to any central bank, according to Chris Brendler, Managing Director and Senior Research Analyst at D.A. Davidson, Bitcoin may eventually prove to be a good inflation hedge, but as a relatively new asset class, its value is currently being overwhelmed by market volatility and speculation. Since the trading sentiment is dominating short-term fluctuations and a large portion of it's connected to speculation, the cryptocurrency market has recently been following the stock market, according to Brendler. What does it signify for investors if Bitcoin isn't quite the inflation hedge that has been claimed? Is it still worthwhile to have in your portfolio? Or to maintain an investment plan that contains a portion of cryptocurrency? The ideal inflation protection is diversification, not any one asset type. Diversification, according to experts, remains the most effective inflation hedge. Simply said, diversification is the process of incorporating a wide range of several asset classes into your portfolio, including stocks, bonds, ETFs, and index funds. According to experts, the majority of investments should be held in broad market funds that cover a variety of industries. ETFs can diversify your portfolio more effectively than handpicking individual equities, which reduces risk. There is still a lot of companies in your portfolio that are performing well, even if one fails. Even blockchain ETFs exist, allowing investors to purchase shares of businesses that are known to have either ventured into blockchain or used cryptocurrency technology in their operation. While Bitcoin has the support of millions around the world, we would ask for your support by liking this video and subscribing. It would greatly help us bring you current info to keep you informed on the ever-changing world of cryptocurrency. Many claim that underdeveloped nations are ideal locations for cryptocurrencies, highlighting the significance of having a backup to fragile currencies. Nigeria, Venezuela, Colombia, some areas of Brazil, and Vietnam are just a handful of the few nations where cryptocurrency has established itself as a mainstay. Alternative payment methods are used all around the world as a result of failing economies, high inflation rates, youth unemployment, and weak local currencies. For millions of people to be rescued from poverty, Bitcoin must grow. The most favorable environments for cryptocurrencies are those where the population has inconsistent or no income. In addition to that, no matter how hard people work, a respectable standard of living won't be possible if the domestic currency is severely devalued. Another problem is that young people in developing nations frequently have to leave their homes in quest of better futures due to underemployment. Young professionals who choose to remain in nations like Nigeria, for instance, are more inclined to utilize cryptocurrencies, particularly Bitcoin. Cryptocurrencies offer greater stability for citizens than governments in nations with depreciating currencies and inflation while having a variable value. A skilled worker from a developing nation who is paid in Bitcoin has the opportunity to save money, wait for price increases, and earn more. These opportunities are not available through banking institutions. Another reason why cryptos are so popular in developing nations is that they enable international payments at a lower cost than banks do. Many nations already have Bitcoin ATMs where users may withdraw cash and spend it in neighborhood shops that don't accept Bitcoin. Professionals from underdeveloped nations may also be compensated in Bitcoin or other cryptocurrencies and save them for their later years. Some consider it as a requirement, while others see it as a need for a later point in one's life. The main reason why Bitcoin is so popular in underdeveloped nations is that people there are desperately trying to protect themselves from ineffective governments and collapsed economies. All individuals cannot just leave their homes when difficult circumstances arise. The survivors must seek out cryptocurrency trading platforms like Bitcoin Era to increase their prospects of a better future. It is extremely difficult for the authorities of those countries to control the usage of cryptocurrencies. Cryptocurrency transactions are difficult to track and subject to taxation by governments across the world, since they are a decentralized financial alternative that may convert into fiat money based on the demands. Since the launch of Bitcoin in 2009, some nations have outlawed cryptocurrencies, while others have embraced them wholeheartedly in the hopes of ensuring a prosperous future for their population. Decentralized economics contributes to the development of an integrated world economy for all, although the development won't be quick if it ever takes place completely. Due to corruption and shattered economies, developing nations view the creation of cryptocurrencies as the only solution to solve poverty, while those with strong local currencies utilize cryptocurrencies to either safeguard their money or increase it. The final truth is that the international trading market is being gradually replaced by cryptocurrency. Well, that's a wrap on this video. So what do you think about the direct link between inflation and crypto performance? Be sure to let us know in the comments below.